What are different types of debt mutual funds? 1. Overnight funds. These funds invest in securities with a maturity of 1 day. 2. Liquid funds. These funds invest into debt securities which will mature in less than 91 days. The primary source of return is interest income. Liquid fund is a very short-term fund and seeks to provide safety of principal and superior liquidity. 3. Ultra-short duration funds. They invest in the money market and other short-term securities of maturity up to 365 days. You can invest in these types of portfolios for between 3 and 6 months. The objective of these funds is to generate a steady return, mostly coming from the accrual of interest income. 4. Low-duration funds. The fund manager of this fund invests in debt paper which invests for 6 to 12 months. 5. Money market funds. These funds invest into securities with maturity up to 1 year. This fund invests in mostly money market securities. 6. Long-duration fund. As the name suggests, these types of funds anyone should hold for a long term, generally more than 7 years. 7. Corporate bond funds. These types of funds invest in corporate debt securities. These types of funds may generate higher interest income. Credit risk associated with this type of fund. 8. Credit risk funds. These types of funds invest in different credit risk papers. Lower credit risk paper may give higher return, and in opposite, higher credit risk paper may give you better return. 9. Gilt fund. These funds invest in government securities. It is a safer kind of fund as they invest in government securities. 10. Dynamic bond fund. This fund invests in the short-term and long-term papers by managing credit risk and interest rate risk. 11. Floating rate fund. These funds invest primarily into floating rate debt instruments. In these instruments, the coupon is not fixed for the term of the instrument but is periodically revised with reference to the market rate. 12. Fixed maturity plan, FMP, are a close-ended funds that invests in debt securities with maturities that match the term of the scheme. It redeems in maturity and paid to investors. It issued for various maturity periods ranging from 3 months to 5 years. Mutual funds are subject to underlying risk. Please read the offer document carefully before investing.